Hello and welcome. You've tuned into Last Tick here on News 9 Live. I am Krishnakumar. We begin with how the markets closed for the Thursday trading session, and what a trading session it was. Sensex up nearly 1,000 points. There you go on your screens. Sensex above, closing above the 70,000 peak. It scaled recently, 70,514. And you have 1.34% gains on the Sensex and similar gains on the Nifty as well, above that 21,000 mark, closing above 21,000 mark. A fantastic trading session for Indian stock markets. Nifty mid cap, small cap, no questions asked over there, always in the green. But today, Sensex Nifty having a remarkable trading session. India's volatility index is up 2.6%, but still at the 12.38 region, which is a comfortable region. But it's a fantastic day of trading session, and we have a very special guest joining us, helping us break down the day's trading session. That is Sudip Bandyopadhyay. Sudip, thank you so much. Pleasure always getting you on the show. Talk to us. What a day it has been, right from the way Wall Street closed overnight to the commentary from the US Fed chair that there's a very good chance that we're going to get a rate cut very soon. There will be no more rate hikes. Clearly, Indian markets lapping up that news.
Absolutely. Why Indian market? I think the US markets lapped up that news yesterday, and there was a rally in US market as well. And obviously, the follow-through rally was in Indian markets as well. I mean, they were pretty much all positives. It's a Goldilocks scenario for Indian market. Pretty much all the cues, all the the indications are positive. So obviously, there was a rally. I think FIIs were a bit on tenterhooks regarding this announcement, whether the Fed chair eases and the stance changes. Very clearly, the stance has changed, and that was clearly articulated in an unambiguous manner. And also the statement that there's no fear of recession in US was a big relief for multiple sectors, particularly IT, I would say, and that's probably the reason why even IT joined today's party.
Right, IT stocks, in fact, leading the surge as far as today's trading session is concerned. But Sudip, I want to ask you, talk to us about the way forward, because what a December it has been for stock markets. It is coming on the back of 6 to 7 months of a bull run, and then you have the state election results pushing the markets up even further, and now you have the US Fed commentary charting a course for the markets, would you say, for the year 2024, including the revival of Indian IT?
Yeah, absolutely. I think you named the factors. One is, of course, the US. There was a big worry as far as FIIs are concerned when, about a month and a half back also. US yields were going up. There was a question mark over, how US recession or how landing will happen, whether it will be a hard landing or soft landing. Very clearly, it's been a very comfortable soft landing. And yields have started to come down. They have touched 4% in US, and the risk-on mood as far as FIIs are backed. I also must point out one factor that, geopolitically, I think FIIs are more inclined now to invest in India vis-a-vis China. Tactically, some of them are still going to China and investing for short term, but the long-term and structural money will and are moving out of China. Now, if you look at the total investment made by FIIs in China over the years, the accumulated amount is close to $3.5 trillion. If you compare that with India, the investment is only 0.6 trillion. So, even if 1 trillion moves out of China, and that does come to, part of it comes to India, I think Indian markets will be in a different orbit. Now, on top of that, we have, of course, domestic SIP flow, which is incremental, about $2 billion per month. Now, 50% of that probably is equity and equity-related products. Now that, in totality, there is a significant amount of money which is coming into Indian equity markets on a regular basis. Also, the indicators, corporate performance has been good. Monsoon, after being a little deficient, picked up. State election results gave us the assurance of stability. Now, all this put together, I think we are looking at a very good 2024. Now, the rally may not continue the way it has happened, let's say today or other few occasions, but it will be a slow and steady growth as far as Indian capital market and Indian economy is concerned. That's pretty much what we believe.
Right. Just to bring it down to today's trading session, if we look at the top gaining sectors for the day, two clear outperformers. that IT pack up 3.5% for the day, whereas you had the Realty pack up nearly 4% for the day. You know, we were talking about the IT pack making a comeback eventually in 2024. Look at that Realty pack. That's been another story that's waiting to burst.
Yeah, absolutely. I think, one of the most rate sensitive sector has been realty. And, the indication or the first signs that the rates will start coming down sooner than later, I think is definitely further good news for realty. There has been an upswing from, towards the middle of 21, 22, as far as realty is concerned, and that has continued unabated. We've been seeing solid residential demand, particularly in the higher end, and solid commercial demand as well. Now, most of the well-managed frontline realty companies are having a time of their life. And on top of that, if interest rate starts coming down, I'm sure pretty much we will see a surge in demand in low income as well as medium income housing segments as well.
All right, so that's the way forward for the Nifty Realty pack. As we're discussing, Sudip, let's also quickly take a look at how the Asian markets closed for trading. Bear in mind, we've been talking about how Wall Street closed for trading. Yes, Dow, Nasdaq, S&P in the US, all of them up in the green. But there you go on your screens. Hang Seng, Hong Kong's Hang Seng closing up 1% for the day. Shanghai Composite closing marginally in the red, down about 0.3%. And the Nikkei too in Japan, down nearly 1%, 0.73%, and South Korea's Kospi closing up in the green, 1.34%. Now, Sudip, it's become very clearer and clearer over the course of time that Indian markets are not necessarily taking cues from other Asian markets and the way they are behaving. But how would you read the way Asian markets have reacted for the day, apart from India?
I think it was a mixed bag very clearly. I think there are local factors, multiple local factors, which one has to factor in before we talk about markets. So as far as India is concerned, there is a confluence of positive news, whether it's the domestic or whether it's international. And even the geopolitics has been helping India. Now, the biggest concern for Indian market, Indian economy is oil prices. Now, when geopolitical tensions erupted, everybody was expecting oil prices to shoot up and Indian economy to suffer. Fortunately, I think somewhere the realization has come that India has managed the scenario very well, and oil prices also have started coming down. They're hovering around $75 to $80 per barrel of Brent. Now, that's pretty manageable as far as India is concerned. So overall, all the factors are good as far as Indian markets are concerned, and that's pretty much the reason why Indian markets, to a great extent, have decoupled from other Asian markets. Barring exceptional circumstances, I think India will continue its own continue to chart its own course, quite independent of whether it's a Korean market or a Chinese market or a Japanese market or even Chinese market.
Fair enough, fair enough. India has learned to decouple itself from other Asian markets. Let's also take a look at the top gainers and losers in terms of stocks for the day's trading session. Bear in mind, we've been talking about the IT pack. Infi was up nearly 4%. Tech Mahindra up over 3.5%. You take Wipro up 3.5%. HCL Tech up over 3%. I mean, all top gainers for the day, Sudip, all from the IT blue chip pack.
Yeah, absolutely. I think what was ailing the IT was, the fear of recession in US was leading to a lot of order cancellation, postponement, and multiple other issues. Also, the people were holding back; they were not placing orders, and that was pretty much coming out in the management commentary of all these IT companies. And obviously, with about 50% of their income coming from US, if the US gets into a recession or a slowdown, that definitely affects Indian IT companies. And that's the reason why Indian IT companies' performance in the capital market and even the financial numbers were pretty subdued. Now with US, very clearly US Fed Chair announcing that the recession fears are over discussed and too much discussed, and there is no real recession happening in US. I think that sends a huge signal to US corporates that the worry should be over, should be behind them, and the expectation is Indian IT companies will start getting back the orders which they were missing out on, or the postponements will be nullified now, and good times will once again start.
Good times will once again. In fact, the US Fed Chair's commentary, Sudip, that was not just an indicator for American companies and consequently Indian IT companies, also to the Indian retail investors as to how the IT stocks are going to play out going forward. Sudip, at this stage, I also want to talk about the IPOs. This week alone, 7 IPOs hitting Indian markets, 2 listings, recent listings doing phenomenal. Like stock like IREDA, which listed last month, giving phenomenal returns. You have Inox opening today. You have Sierram Recycling opening today. There you go. Shree OSFM E-Mobility IPO opening today. Bear in mind till the 18th of December. Face value of 10 rupees per share. Price 65 rupees per share. Lot size of 2,000 shares and total issue size of around 24.6 crore rupees. That's Shree OSFM E-Mobility. We also have Inox IPO opening today. We had DOMS Industries IPO open yesterday. So talk to us, what are the IPOs that are catching your eye? Look at that, Sierram Recycling as well. Opening today. Sudeep, any of the IPOs opening today that are catching your eye that you would tell our viewers that they should go for it?
Inox definitely is a great business. One can definitely go for Inox. It's a well-established, stable business, very relevant because they play a great role in LPG, with these cryogenic cylinders which they manufacture, cryogenic tanks which they manufacture is in demand both in India as well as globally. More on top of it, it's a close to 30-year-old business, very well-established business. So investors can definitely apply for Inox Industries IPO. I think that's definitely a good IPO. DOMS IPO, obviously, yesterday, it opened yesterday, and the margins and the performance has been very good. And if you compare with some of the other peers which are in the listed space, I think they're attractively priced as well. So DOMS can be also applied. The housing finance company, which Shelter has come up with an IPO yesterday. That also can be considered very much on the back of the demand for realty and demand for related loans. Of course, the interest rate coming down definitely will help a financing company like Shelter of Housing Finance.
Right. The only thing I have to ask you at this stage is that how does somebody looking at all that's happening in the markets decide when is a good time to enter? And more importantly, is every dip a buying opportunity at this stage? This is a question on behalf of all those waiting and wondering after all the volatility as to what is a good time to enter the markets. There was just 3 months ago, there was talk of are the markets overheated already? And then we saw all those mid-cap and small-cap stocks doing really well and continuing to do well. I know the adage, there's never a good time, there's not a particular time to enter the markets, but how does a retail investor sort of pace himself or herself when they're looking to enter the markets?
Well, I think, you can't time the market, let's put it this way. It's just impossible. If somebody says that they can't time the market, I think they're exaggerating. To my mind, as far as the retail investor is concerned, today is a good time to enter the market. Tomorrow will be a good time to enter the market. If you are looking at a long term, if you are looking at a medium to long term for Indian capital markets, I think it's an upward trajectory clearly. The return will be good. Unless you are a little well aware and educated investor, I would say you go through the mutual fund route.
Okay.
When I say educated, I talk about specifically educated as far as stocks are concerned. If you don't have the time and if you are not fully conversant, opt for a mutual fund and remain invested for 1 year plus time horizon.
Okay.
That's the only way to ensure that you are doing justice to your money.
Okay. Mutual funds. In mutual funds, I have one quick question for you. Would you go for the equity mutual funds, or multi-asset? Any particular choice that you would go for?
Well, for a conservative investor, I would say balanced type of a mutual fund is good because a lot of things action is happening in the bond market as well. So if you want to kind of to an extent remain hedged, I think a balanced mutual fund is good. From one of the leading fund houses, balanced mutual fund should do wonders. If you're an aggressive investor, there is absolutely no problem in going for a growth-oriented equity mutual fund from one of the top fund houses.
Fair enough. Sudip Bandyopadhyay, their group chairman of Inditrade Capital, joining us here on Last Tick. Sudip, always Pleasure having you and hope to keep having you as often as possible here on News 9 Live.